Well, for more on how Turkey's economy is doing, let's bring in CGTN's global economics analyst, Saruhan Hatipoglu. Welcome back to the show.
Good evening, Rachelle.
Now, it seems as if for years we've seemingly heard about Turkey's economy struggling. But how would you characterize the current state of the economy there?
Well, everything we heard, what an opening, right? All the data that we heard are negative, and for a good reason. And the future doesn't look that bright either. You mentioned the third quarter numbers, which is the latest one. 1.8% annually, 2.7 quarter-on-quarter contraction. Private consumption, which is very worrisome, is 3.2 down, contracted during the same time period. But if we look at broad sectors, manufacturing, agriculture, services, construction, all of these industries contracted during the third quarter of the year. And the outlook is not that good either. You also mentioned the Turkish lira. 20% loss of value last year, started 7% this year, worse than the Mexican peso, which is really hard to accomplish given what's happening here with Mexico.
Right.
So there's not a bright spot, unfortunately, that we could look at and say, hey, this is going to act up, and this is just a short time period. The economy is going to move again. We don't see that at BERI. We don't see that in the next 3 to 6 months for Turkey.
Unfortunately, more negative news. We saw that the S&P ratings agency recently downgraded Turkey's sovereign debt to junk. Now, Turkey's deputy prime minister suggested there may be some political motivations for this and the people shouldn't read too much into it when a rating goes up or down. How much cause for concern is there?
Well, again, these are competitors to BERI as well, but I have to agree. Some competitors or some rating companies act too fast, really. They change ratings pretty quickly. We've seen that with Indonesia, what happened there. But look, what is there to be optimistic about? We just talked about the domestic numbers here. Well, let's look at the external numbers. Current account deficit, again, is pretty high and is going to increase from what we're seeing. And the banks, external assets of banks, Rachelle, are about 50 billion. Liabilities have increased to 180 billion last year. This was in equilibrium 7 years ago. Now, banks will tell you that's okay because we lend in foreign currency and we get the money in foreign currency. There is no currency mismatch. Yes, but the corporate sector that has borrowed, majority of them went into the property sector, and that is also suffering. So there's a lot of debt overhang. I do agree with the downgrades on the rating agencies. We've downgraded Turkey 6 months ago as well.
Now, let's also look at the refugee situation in Turkey. What sort of impact is that having on the economy?
Economy, really terrible. We've heard numbers from President Erdogan recently. He's talking about 25 billion. He used to say 12, 13 billion about 2-3 months ago. And Turkey has about 2.7 million refugees. And that number hasn't increased since. So people are asking, well, why are you saying 25 billion?
Right.
This time they included, so 12.5 billion was the state's spending on state agency spending on the refugees. Now they've included the local municipalities as well as civil society, civil organizations in Turkey, and the number comes up to 25 billion. That's a huge drag on an economy whose numbers we just talked about.
Now, the deal with the refugees with the EU was clearly a very big issue last year, and people are continuing to ask questions. And we also know that British Prime Minister Theresa May became the first Western leader to visit Turkey since the failed coup attempt. How are relations with the UK and the EU in regards to Turkey at the moment?
Well, EU relations are pretty bad, with the European Parliament pretty much telling or not wanting Turkey in the negotiations. Last year, they voted vehemently against that. So the relations with the European Union are going to be very rocky in the short term, but the UK is no longer in there. So they can actually go out there and cut these bilateral deals. And for the UK, Turkey is an important market, and I think the first jet sign, fighter jet sign signature is very important. It's about £100 million. And I think more bilateral agreements are going to be coming between Turkey and the UK in the near future.
And speaking of bilateral agreements, what do we know about Erdogan's expectations with the new Trump administration? How do you see that panning out? Well,
Turkish government's attitude was anybody but Hillary, because of Hillary Clinton's support for People's Protection Units, which was seen as pretty much synonymous with PKK, whereas the United States and the Hillary Clinton administration would do this, continue the relationship because that's the major front against ISIL. So that was the big issue here. But we're seeing now more clearly with this crazy week that we had, there are some statements that have bothered Turkey quite a bit, especially President Erdogan. Immigration ban is one of them. The Gülen extradition that Turkey was seeking for looks like it's going to be delayed. So that's also not going to help the relations in the near future.
And so taking that into consideration and some of the economic headwinds that Turkey was already facing in the last year, what are your prospects then for this year for them?
Well, domestically, we talked about the numbers, and they're not going to improve in the next 6 months. So we look at the global economy. Can something happen that can bring investments into Turkey? And if you look at what's been happening in the global economy with protectionism talks going on, shifting from multilateralism to bilateral agreements, that is going to take its toll on the global economy. The U.S. is going to get in a growth spurt with the infrastructure spending and tax cuts, most likely. And that just might cause interest rates to raise a little faster because inflationary expectations are going to set in. And that only means one thing for emerging markets: more capital outflows. And Turkey is no exception from that trend.